Hello and welcome to Markets Next Week. I am Nivrita Ganguly and this is your one-stop for complete picture of the trading action in the week gone by, as well as the important cues that we're watching for the week ahead. But it's the first trading week of the new financial year. We've managed to close out positive, and the big question is coming on the back of that stellar run that we had in the month of March, how things will pan out going forward from here. But let's first bring in Monica Waldia then to get a sense of how the market action wrapped up in the week gone by. Monica, take us through all the big movers and shakers of this last week.
Well, Nivrita, it was a week of consolidation in markets. We started FY20 on a strong note with record highs on both Nifty and Sensex, but failed to sustain the gains at higher levels. Well, Nifty banks saw cuts of about 1.3% after banks lost momentum on back of the RBI rate cut. Well, the broader indices barely managed to close in the positive with minor gains of 0.1% each. Well, let's take a look at the sectoral action then. Both BSE Realty and Metals saw gains of almost 3%. The BSE Auto, Telecom and IT saw gains between 2 to 2.6%. Moving on to the losers, oil and gas was a top loser and saw cuts of about 3%. Energy, PSU, FMCG sectors also saw cuts between 1 to 1.5%. Well, let's take a look at the Nifty gainers then. Tata Motors was the top gainer and saw massive gains of about 17% on back of better sequential growth in the JLR sales. Well, Bharti Airtel also saw gains of about 7%. Maruti Suzuki registered more than 6% gains despite announcing a production cut of around 21% for March. Well, other stocks like Indiabulls Housing Finance saw 5.5% gains on back of their fundraising plans that they recently announced. Tata Steel saw 5% gains. Bajaj Finserv also saw 5% gains on back of better AUM growth expectations moving ahead. Well, HDFC, Ultratech, Hindalco were some of the other gainers in trade. Moving on to the losers then, BPCL was the top loser and saw cuts of about 10% as the OMCs took massive hit this week. Well, Zee Entertainment also saw cuts of about more than 7% after the promoters sold their stake in the company. HUL, Sun Pharma, ICICI Bank and Titan on the other hand were some of the other losers with cuts of around 3% each. Well, let's take a look at the mid-cap action then. Godrej Properties was the top gainer with gains of about 19%. Well, the stock also hit fresh highs after launching their new residential projects in Navi Mumbai. SAIL, on the other hand, also saw 10% gains as their steel production rose by 8%. DHFL, PNB Housing Finance also saw good gains of 8% each. Motilal Oswal, IIFL Holdings, Oracle Finance, on the other hand, also saw gains of about 5% each. Talking about the losers then, NBCC was the top loser and saw cuts of about 7%. Both Blue Dart and Torrent Pharma also saw cuts of more than 6%. GMR Infra, Amara Raja, IDBI Bank and Whirlpool were some of the other losers in trade this week.
All right, Monica, thanks very much for running us through, of course, all the market action that we saw in the week gone by. It was a very event-heavy week, like you said, but now that that's behind us, the market is, of course, looking for its next triggers, its next cues. Then let's bring in Abhishek Ranjan to get a sense of the key factors that are in focus as we set ourselves up for next week. Abhishek?
All right, as far as next week is concerned, well, as from the corporate point of view and some clear market cues that one should expect from next week. Well, beginning next week, you have the Siam auto sales data release that the entire auto space will be clearly watching out for. On 12th of April, the mega beginning of the fourth quarter results season with Infosys and TCS announcing the results on the same day, that is 12th of April next week. Also, you have the important hearing of contempt case in the Supreme Court against Singh brothers. So these were a few of the elements that one needs to keep an eye out as far as the market cues are concerned, with the most important one being the fourth quarter results announcement of the two IT giants, Infosys and TCS, on the same day. And as far as the political cues that one should keep an eye out on for the next week will be on Supreme Court hearing plea challenging Centre's decision on issuance of electoral bonds, and that is happening on Wednesday, that is 10th of April. And on Thursday, the the elections, that is the Lok Sabha general elections, kick-starts with the first phase of it scheduled for 11th of April, with 91 constituencies going to polls in the first phase. And lastly, as far as the macroeconomic data, then one needs to keep an eye out as far as the next week is concerned. On 12th of April, you have the March CPI data as well as the February IIP data that will be released for the month of March and Feb respectively on the 12th of April.
All right, so those are big events to watch out for, both domestically as well as globally, as we set ourselves up for next week. Thanks very much for that, Abhishek. In fact, let's talk about the trade setup then, as we set ourselves up for trade on Monday morning. Piyush Jain is here to tell us what we can expect in terms of trading action. Piyush, record highs coming in the first trading week of the year, but then we've seen that sort of consolidation mode, slip into the market sentiment at the moment. What can we expect as we go into trade next week?
Right, again next week from the global markets, the reaction to the US monthly jobs data will be the first thing. Asian markets again will be giving us cues. But for us, domestic markets, what are the levels which are going to be important? For Nifty, 11,730 once again is going to be important. But the way again Friday cues have panned out, it should be looking like again we should be again hitting all-time highs within the next 2 sessions. So that's the first one, 11,800 again from there. So all-time highs is what the data is pointing out, that could be coming again. Now towards the lower side, if in any case of adverse scenario, the 11,630, that area, and the 11,540, 500 is a good put return area. So the first sort of scenario will be again we should not break 11,500 in any case of scenario here, or in any case of selling here. So I think that is one area I think which the traders are going to find as a good support. On the higher side, all-time highs is what actually we are aiming for. Now let's bring Bank Nifty once again, and let's see again how the Bank Nifty is going to trade here. Bank Nifty, what again basically are the levels again? Now they would be actually looking for once again around the higher side, again 30,200, that's the Bank Nifty levels again for you. Again you cross this, you are set for a 400-point rally on the Bank Nifty. On the lower side, 29,800, that's the level you should watch out. That level is taken out, 400 points down. So for now, again the first where we have closed, this perhaps could be the first bias, because Nifty is actually giving you a positive sort of print here. But again these are the levels which are going to work out for. Which are the sectors which perhaps could be showing us some interesting trends? Let's look for the slide where again the sectors are actually with the positive sort of outlook. Are there metals, IT and the mid caps? They all actually are looking positive for next week. Recall we have the large cap IT results next week, and what we have seen between Thursday and Friday, there has been some good bullish accumulation happening into the mid cap IT stocks, a bit into the large cap IT stocks, but broadly again those sectors are looking positive here. Stocks again which actually are adding some good bullish positions, Infosys, the large cap, along with that again you have Intellect Design, another one from the IT pack here. Both actually, Infosys in the futures has added long positions, Intellect in the cash market has seen some good bullish accumulation. Cement remains around the pack again, where actually we have seen continuous buying. So Ultratech Cement has added long positions for next week. Housing finance between Thursday and Friday has seen huge accumulation. Canfin Homes is one example, but broadly there is a positive sentiment in the housing space here. So Canfin and the Jagran Prakashan, we have talked to the management again the last month. March quarter was actually a very strong quarter, and we actually were seeing on Fridays again another round of strong accumulation. Last stock, APL Apollo Tubes, coming from the smaller mid cap pack. Again we have seen some good volumes into the counter. So this is another stock again which is looking good for next week. But if I summarize, setup so far is looking at that maybe we have completed our correction, our pullback. We could be starting positive between Monday and Tuesday next week. And secondly, IT, metals and mid caps, these are the areas where again the focus is going to be.
All right, IT, metals, mid-caps, we are definitely seeing some amount of churn sectorally as well. Thanks very much, Piyush, for running us through the market action. In fact, on that note, let's welcome in our guest joining us on the show today, Avinash Gorakhsakar, Head of Research at Joinery Capital Services, joining in on the fundamentals, and Dyaneshwar Padwal of Technical Analysis at KIFS TradeCapital, joining in on the technicals. Welcome to the show. And, Avinash, let me just start with you. The big event is behind us, and that's the RBI monetary policy decision. We got another rate cut, 25 basis points, pretty much bang in line with what the market was anticipating. But that said, after the kind of run that we've had in the month of March, it does seem like we are in a bit of a consolidation mode as far as the market goes. But fourth quarter numbers will be coming in soon. We kick things off, of course, with the two big IT majors at the end of next week. What is, your expectation of what will decide market direction going forward from here?
No, I think clearly with the RBI policy out, I think clearly, the policy statement was fairly neutral to dovish. Our sense is that now with the RBI policy out of the way, clearly markets would be looking at quarterly, fourth quarter numbers, and I think the frontliners in the coming week would obviously be the IT companies. Our sense is that Infosys could possibly surprise the markets with a little bit of better guidance, and obviously margins could possibly show a marked improvement considering the headwinds in the US market, and especially some positive headwinds coming in from the currency factor. So I think clearly IT would be a pack which could be noticeable in the coming week, and I think broadly the markets are in consolidation zone. The first phase of election actually commences in the coming week, and I think as and how now election news flow comes in, you're going to see the markets probably reacting to those news flows. So overall I think the markets would consolidate, and depending on what kind of news flows come out from quarterly numbers, we could be seeing a lot of stock specific activity rather than the broad market.
All right, so things are going to turn stock specific after the broad-based rally that we've seen so far. We've seen FI buying really propping the market up so far, taking us to record highs. But now it's all about the fourth quarter numbers as well as, of course, election season kicking off. Dyaneshwar, in terms of the range that we find ourselves in, fresh record highs coming in, we failed to sustain at those levels, but we're not too far at all. Even when we're seeing selling on a given day, it's not the kind of deep 100, 150 point cuts that we've become accustomed to in the early part of this calendar year at least. What's the sense then as we go forward from here? New record highs on the horizon, and if so, where do you see the Nifty going really?
Yes, first of all, happy to all the crew members of BTVI and all the viewers of BTVI. Of course, if you look at the overall chart structure of Nifty, so Nifty is sitting in a clear uptrend from the bottom of 11,000 mark, and recently we have seen that the Bank Nifty has outperformed the key benchmark index, followed by the Nifty has made a fresh record high but could not sustain on the high. So I feel that for the next week Nifty may trade in a very tight range of 11,800 and 11,500. If bulls manage to take out the 11,800 mark, then only we may see the further escalation towards the 12,000 mark. In case of Bank Nifty, yes, of course, we have seen the fresh break record high and close above that, and recently Bank Nifty is trading in a very tight range of 30,600 towards the 30,000. So that could be the range for the Bank Nifty for the next week.
All right, what about the Nifty IT index, Dyaneshwar? Avinash was just discussing what we can expect in terms of earnings this time around. Infosys, TCS, they've been doing fairly well. In fact, IT overall has been seeing some amount of traction after the recent kind of correction that we saw come into that index. These are the outperformers of last year, but looking forward from here, where are you seeing the potential? Not just the frontline names, even if we talk about the likes of Tata Elxsi, NIT Tech, Mindtree, anything looking interesting to you from this pack?
Yeah, of course. In 2018, we have seen that the IT indices has outperformed the key benchmark index, and the rally has been initiated by the Infosys and TCS, and later on it is followed by the midcap IT. So in that space, Infosys looking quite impressive because recent chart structure suggests that the stock is moving in a higher top, higher bottom formation. And recently in today's trading session, we have seen that the renewed strength is clearly observed on the Infosys. So one can go long in the Infosys by keeping a stop loss of 725 on a closing basis for an initial leg of a move towards the uncharted territory.
All right, well, that's the target as far as an Infosys is concerned. Expect further upside for this one. Let's take a quick break. On that note, we'll come back, talk about our experts' top picks as we set ourselves up for trade next week. Also talk about the kind of sectoral churn that we're seeing at the moment. Autos coming back in focus, metals doing fairly well, realty, of course, continuing to lead the way. Lots to discuss. We'll be back in a few minutes. Welcome back. You're watching Markets Next Week right here on Business Television India. Metals had a good week, and this coming on the back of a fair amount of selling pressure that we've seen come in for the entire metal pack. Steel stocks in particular were on the move. Tata Steel, for example, one of the top gainers in Friday's trade. Along with that, names like JSW Steel have been doing fairly well. Even aluminium names, so we talk about the likes of Vedanta, Hindalco, Nalco have been on the move. And mid-cap steel names, JSPL, Steel Authority of India, even a JSW Steel, of course, has been participating. Avinash, what is the sense at the moment? There's this sort of a turn to the steel, cement, infra kind of a space. Is it the election theme that's playing into this, or is there something cyclical and fundamental that we should be catching on to as far as the metal space is concerned?
No, I think clearly within the metal pack, I think most of the companies have been showing very strong volume growth. In fact, last week we saw SAIL reporting volume numbers which were up by almost 8%. Our sense is that most of the integrated players like say Tata Steel or typically even a SAIL could possibly see a lot of accumulation ahead of the fourth quarter numbers. Largely, I believe that private capex has started building up again, and that is one reason why possibly in the domestic market output for the steel producers is doing pretty well. In fact, global metal prices have also remained pretty firm. So our sense is that you could see most of these companies posting a pretty decent set of numbers for not only Q4, but I think even the first and the second quarter of FY20 should be reasonably good. So I think you could possibly see a lot of action in the metal companies. Cement is one sector where possibly some selling could come in, largely because stocks have run up quite fast, and I think you're going to see possibly some consumption patterns happening before the monsoon sets in. But overall, I think clearly cement is a space where possibly it could follow the metal sector.
All right, so positive as far as metals go. Cement, you could see some amount of selling pressure, but it's likely set to follow coming on the back of what's going on in the metal space. Any of these names looking good to you, Dyaneshwar, especially if you talk about names like Steel Authority of India, even a Tata Steel that's been leading the way. What would you be doing with these metal counters, and can we expect this rally will extend itself going forward?
Yeah, if you look at the overall chart structure of Tata Steel, so on a higher time frame chart, we have seen that the stock was unfolded into the corrective pattern and moving in an downward sloping channel, and recently we have seen.
All right, I think a little trouble there with our line connecting to Dyaneshwar. We'll try and get him back as well. Avinash, it's not just the metal space where we've been seeing traction. Autos are making a comeback, and in particular, I have to ask you about a Tata Motors. The kind of gains that we've seen on this counter, in fact, if we can pull up a longer term chart from that cut that we saw coming in January, in the last 3 months, we've more than recovered the kind of pressure that we saw on the back of Tata Motors reporting that massive impairment in their third quarter, and of course, their biggest ever quarterly loss on the back of that. Fourth quarter numbers now just around the corner. We've seen a 17% jump come into the likes of Tata Motors in just the last week alone. What would be your expectation as far as fourth quarter results from Tata Motors goes?
I think fourth quarter numbers for Tata Motors should be reasonably good if you compare it on a sequential basis. I think Q3 had a very large exceptional loss, so probably this kind of exceptional loss may not get repeated in this quarter 4. But overall, I would believe that the markets are quite excited, considering that the Chinese PMI data has now very strong momentum. Most importantly, I think the JLR numbers from the UK markets have also shown a positive trajectory. So I think clearly maybe not the fourth quarter, but hopefully if these numbers provide the momentum, we could see a better kind of growth trajectory in FY20. The markets are definitely looking at FY20. I would be surprised that FY19, the fourth quarter, may not be all that great, considering that in the management commentary, the management had clearly hinted that margins could possibly take some time to recover.
All right, so that's a Tata Motors trading above the 200 rupee per share mark. Dyaneshwar, what about you? What would be a technical view on a Tata Motors? We've been stuck in that tight range for the longest time. It looks like we're set to break out of it. What would be your target on a Tata Motors?
See, if you look at the overall chart of Tata Motors, so we have seen that the Tata Motors was trading near 202 level from the 2018 October. So it was a very wide range of consolidation, and Tata Motor has made a bottom formation and tried to cross the 202 level and sustain about 202. So we probably see the stock to march towards the northern trajectory towards the 240 mark.
Dyaneshwar, what's the sense on some of these realty stocks that have been outperforming since the start of the year? I want to talk about a Godrej Properties. In fact, if we pull that one up over the last 6 months, it's seen a jump to the tune of about 95-96%. Even in Friday's trade, it was one of the best performers of the day as far as the realty pack is concerned. As an index, realty is outperforming. What do the technical charts suggest in terms of, exhaustion levels or further upside, whichever the case might be, as far as realty is concerned?
Yeah, if you look at the overall chart structure of the Godrej Property on a higher time frame charts, it has made a inverse head and shoulder pattern, and it was facing a resistance of near about 780 and 800 marks. After the bulls has crossed that resistance, so once the momentum start, price tends to remain in the motion more or less in the same direction, and it is marching towards the northern trajectory and coming into the uncharted territory. So the trend remained positive for a couple of weeks, I could say. So any dips comes towards the level of 920, 950. So that could be capitalized as a great buying opportunity.
All right, Avinash, what about you? You know, the regulatory environment has definitely transformed if we talk about the real estate space. The most recent rate cut, let's just try and put that in perspective, because the expectation was that if we see an accommodative interest rate environment, we saw the last 25 basis point rate cut, now another one coming on the back of that, this should only spur demand in the real estate space. But is that realistic to expect?
I would believe that, I think the less leveraged companies like say a Godrej Property or maybe a Oberoi Realty could definitely benefit. These companies have got a very strong order book, so revenue visibility at least for the next 12 to 18 months is more or less assured. I would believe that companies which are yet sitting on a large amount of debt could possibly not be able to pull off demand conditions so easily. So I think clearly it's going to be a pick and choose in this market. Investors should actually look at what kind of leverage these companies carry on their balance sheets, because clearly I think headwinds in the real estate markets have actually started turning positive, and I think we could see some improvement in the numbers at least from the second half of FY20 onwards.
All right, point taken. Second half of the current fiscal is when we can see improvement in the numbers of these real estate companies. On a slightly related note then, Avinash, what about the rate sensitives? The entire financial space, NBFCs have been buzzing, on the day after policy, even though PSU banks are still continuing to see selling pressure as we closed out the week. What would you be doing with these mid-cap NBFCs that have already recovered about 20-30% from the recent lows? DHFL was one of the outperformers from this space. We also had names like LIC Housing Finance, L&T Finance, Cholamandalam, Manappuram, all of these are doing well, and of course HDFC hitting record highs.
I think clearly, the kind of crisis we saw post the ILFS issue, I think things have now cooled off, and I think you could possibly see a lot of, pickup in activity, especially in the larger well-capitalized housing finance companies, especially, names like LIC Housing Finance. Even the pure NBFC players like even Edelweiss could possibly be looked upon. I think despite the fact, that the stock has actually done remarkably well in the last 2 to 3 months. I would believe that, the fourth quarter could be at best one of the worst quarters, and beyond that, I think FY20 should definitely start off on a good note. The rate cut cycle, I believe even in the June policy should further, result into a 25 basis cut, and that could possibly lead to a strong demand momentum for these players. So I think overall net positive.
All right, positive on the financial theme. Dyaneshwar, let's get a few picks from you then. It can be from the financial space. We've seen a lot of traction return to many of these names. If you're spotting any opportunities here or anything else that's catching your eye.
Yeah, in case of NBFC, recently we have seen that the very good traction and the good buy coming into the NBFC space. So in that space, I would go for Indiabulls Housing Finance, because recently we have seen that the stock was unfolded into the corrective pattern and was trading near about below the 850 marks since November 2018, and recently it has Bulls has managed to take out that level and close above that level. So that momentum may continue for a couple of weeks. So I would go long in Indiabulls Housing Finance by keeping a stop loss of 880 for an initial leg of up move towards the 950 and 60.
All right, what about the pure play banking names then, Dyaneshwar? If we talk about some of these mid-sized private banks, for example, Karnataka Bank that saw a sharp spike in Friday's trade, RBL Bank has been on the move, even a federal bank has been seeing consistent buying action. It's slowly moved its way up from those kind of lows that we've seen recently. Also, Dhanlakshmi Bank was a name that hit upper circuit in trade. Karur Vaisya Bank, of course, has been in focus. Even a Lakshmi Vilas Bank on the back of some news. I'm throwing a few names out at you, but anything that you are spotting from the banking names?
Yeah, in case of bank, we have seen that the spectacular rally and the vertical wave formation is really surprised the market by the Bank Nifty. And in case of Bank Nifty, initially the rally has been initiated by the private banks, and public sector banks were the laggers in that move. And recently we have seen that the spurt into the PSU's bank, which is contributing to towards the Bank Nifty. I would go for an Karnataka Bank, because recently we have seen that the 2 to 3 days of consolidation and the recent move suggests that the renewed strength is clearly observed on the charts. So one can go long in the Karnataka Bank by keeping a stop loss of near about 132 on a closing basis for an initial leg of towards the 140 to 145.
All right, that's a sense on a few banks. Avinash, let me get a few ideas from you then as we set ourselves up for trade next week, even slightly longer term. It's a volatile time, we can't deny. It's all about elections at the moment. We don't have to talk about financials. Anything else that you're liking?
No, I think within the IT pack, something like a Tech Mahindra could be interesting. The buyback ended today, but I think in terms of the Q4 numbers, the stock should do remarkably well. And within the two-wheeler pack, I think Bajaj Auto looks interesting. I think one could definitely see a stronger volume run-up in FY20, and I think definitely worthwhile taking a punt at this level.
We discussed at Tata Motors. Avinash, what's the verdict on Maruti? We're back above 7,000. The recovery has been as sharp as the fall was. This has always been, the stock market sweetheart, but what's the expectation now going forward?
No, I think fourth quarter numbers are not going to be anything great. The markets have already factored in that fact, but I think FY20 looks to be, at least starting off on a positive note. Hopefully the rate cycle getting better. I think you could see demand picking up, beyond June, and, that's what the market is looking at.
All right, Avinash, Dyaneshwar, thanks very much for joining in, sharing your analysis of all the market action that we're seeing at the moment. Lots to keep on the radar as we set ourselves up for trade next week. But that's all we have in this edition of Markets Next Week. News and updates continue on the other side. Stay tuned to Business Television India.